Meaning of book building. Book building is the process by which an underwriter determines the price at which the shares must be sold in an initial public offer.
Okay, have you now followed about the book building example which I gave? So does it make any sense now here? What is written?
Yes, sir.
Okay, next, yeah.
The process of price discovery requires the underwriter to call forth bids from various institutional investors, such as fund managers and others. However, there always exists a risk of overpricing or undervaluing the shares.
So I told you that, this is a process through which the underwriter or the lead manager, book runner and lead manager or the merchant bankers, they're same thing. They basically, call for bids from various investors. And now, of course, this doesn't guarantee that the price would be the right price. It can be, share can be still, issue can be still overpriced or underpriced. Okay. So further,
The issuing company hires an investment bank to act as an underwriter who decides the price range of the security. The investment bank then invites large-scale buyers, fund managers and others to submit bids on the shares.
okay, now we will understand a little later that how this price band is worked out by the merchant bankers, how they decide about how they value the company, and how these prices are fixed. Okay, so this is very important. So we'll be covering maybe an offline lecture next time. Okay.
The book is then built through the listing and evaluation of the aggregated demands for the issue from the submitted bids. The final price of security is termed as the cutoff price. The underwriter publicizes the details of the order of the bids in order to maintain transparency in the entire process.
So all this process is done in a very transparent manner. Nowadays, the stock exchanges, they help the companies to raise money by allowing their software to be used for book building process. Okay. Okay, just read.
Shares are allocated to the
Sorry. Just read this now.
book building is a systematic process of generating, capturing, and recording investor demands for shares during an initial public offer or other securities during their issuance process in order to support efficient price discovery. The issuer appoints a merchant banker to act as securities underwriter and book runner.
So, they are called merchant bankers. Of course, the issue has to appoint a merchant banker to do this job of book building. Yeah.
Book building is essentially a process used by companies raising capital through public offerings, both initial public offers or follow-on public offers, to aid price and demand discovery. It is a mechanism where, during the period for which the book for the offer is open, the bids are collected from investors at various prices, which are within the price band specified by the issuer.
Okay, so it's very self-explanatory through the example which I gave. So that doesn't require any explanation here. Next.
The issue price is determined after the bid closure based on the demand generated in the process. The process. The issuer who is planning an offer nominates lead merchant bankers as book runners. The issuer specifies the number of securities to be issued and the price band for the bids. The issuer also appoints syndicate members with whom orders are to be placed by the investors.
Now, the issuer has to appoint first the merchant bankers, okay, as the book runners, okay, and they have the company issue has to specify how many shares or securities they want to issue and the price band with the help of the merchant bankers, okay. The issuer appoints syndicate members. Now, there are syndicate members who are going to be basically branches of banks with the help of the merchant bankers. So they are going to receive the bids, at various parts of the country. So whom the orders of the will be placed by the investors. So because all over India and abroad people are applying, so they have to be some members, syndicate members. I'm going to talk about the definition of syndicate members, which has been given by the SEBI document later on. Okay, syndicate members, yeah, it is there. Okay, read.
Syndicate member. Syndicate member means an intermediary registered with the board who is permitted to accept bids, application and place orders with respect to the issue and carry on the activity as an underwriter.
Now, the syndicate members, along with the merchant bankers, normally they act as an underwriters. Now, suppose underwriters want some other banks to also participate in the underwriting process. So, syndicate members they help in two things. One, they can be also a co-underwriters with the merchant banker, as well as they will help to the process of book building. They are the banks who are going to accept the bids and applications at various places in the world, and they're called syndicate members. Just read on the second this thing.
Syndicate members are commercial or investment banks, usually registered with the market regulator SEBI in India, or registered as brokers with the stock exchanges responsible for underwriting IPOs. They work as intermediaries between the issuer companies and investors who bid for IPO stocks.
Okay, so this is the definition which is given by the SEBI under the SEBI ICDR Regulations 2018. Okay, now the process. Okay,
The process. The syndicate members input the orders into an electronic book. This process is called bidding and is similar to open auction. The book normally remains open for a period of 3 days. Bids have to be entered within a specified price band.
now generally the issue price they have to the issue of any company has to be open for at least 3 days. Of course, it can stretch to 10 days because that is the regulation, but normally it is open for period of 3 days. Okay, and the bids have to be entered in the specified price band.
Generally, the number of shares are fixed. The issue size gets frozen based on the final price per share.
Now, before just
On the close of
yeah, carry on, carry on.
Yes, sir. On the close of the book building period, the book runners evaluate the bids on the basis of the demand at various price levels. The book runners and the issuer decide the final price at which the securities shall be issued.
Okay, now at the time when the process is done through book building process, normally a share price band is fixed with the help of the merchant bankers. And at this time, the offer document is called the red herring prospectus because it talks about the number of shares which the company is going to issue, but the price is yet to be fixed. So it's called the red herring prospectus at the time before the final price is fixed. Okay, the moment the final price is fixed, that the same document, offer document, which is called the red herring prospectus, becomes the prospectus of the company. Okay, and then it is filed with the registrar of companies and with SEBI as a final document to be with them. Okay, now, yeah.
Bids can be revised by the bidders before the book closes. Allocation of securities is made to the successful bidders. The rest get refund orders.
So basically, you can once you have put a bid, you can always revise it. Okay, by looking at what is the response and by analyzing the data which is available on the software, which is generally available to the public. So and which is available on the stock exchange site. So you can see how many people have applied, what are the various kinds of bids they have placed. So if you want to revise it, you can always revise it before the book closes. That means before the last date of the offer.
Guidelines for book building. Regulations governing book building are covered in the Securities and Exchange Board of India. Issue of capital and disclosure requirements regulations. Internet book building system. BSE offers a book building platform through the book building software branded as IBBS, Internet Book Building System.
So basically, Bombay Stock Exchange, they have a, book building platform. Okay, they have a software which the companies can use with the help of the merchant bankers.
The software is operated by book runners of the issue and by the syndicate members for electronically placing the bids on real-time basis for the entire bidding period. In order to provide transparency, the system provides visual graphs displaying price versus quantity on the BSE website as well as all BSE terminals.
So there's a complete, transparency in the system. The software, of Bombay Stock Exchange and National Stock Exchange they give graphical representations about how many people have applied, and what is the kind of response a company is getting. So anybody who has applied can even withdraw his application at this stage, or can even place a bid different than what he has placed earlier.
Book building system. The book building system is part of Initial Public Offer (IPO). It was introduced by SEBI on October 1995. Book building is the process by which an underwriter determines the price at which the shares must be sold in an initial public offer. The process of price discovery requires the underwriter to call forth bids from various institutional investors such as fund managers and others. It is an innovative method of marketing securities involving price determination and quantum of securities on the basis of the demand from the prospective shareholders.
So basically, this is all what we have explained in earlier slides also. So this is just a summation. So let's move on. So this was the illustration which we have done. Okay. So this is all about book building. Have you all followed? I mean, is it simple? I mean, Yash, Aruna Pandey, Harshit, I mean, anyone, Vidavat, and Shubhagini, is it clear?
Yes, sir, it was. It was clear.
Okay, so now we move on to the second part of it. Okay, so this was the book building. So I'm just closing this slide. So I have already shared that. In case you haven't got the slides, you can ask me. I will just share it through a Google Drive as well as on the Blackboard. Okay, so let's come back to our main, PPT. Okay, so so we were here, we left the process from here. Okay, so this is eligibility requirement alternate. So here, the companies can issue shares through the process of book building, and where at least 75% of the net offer is to be qualified institutional investors. Before we go any further, so let's talk about some of the definitions which are very important ones. Okay. This is a very long document, so important definitions. So we are just going to cover some of the important definitions before you can proceed further. Okay. Retail investor. So there are various categories of investors who are putting money in an IPO or an FPO or any issue. So just read what is a retail investor.
Retail investor. Retail individual investor means an individual investor who applies or bids for specified securities for a value of not more than 2 lakh rupees. Retail individual shareholder means a shareholder who applies or bids for specified securities for a value of not more than 2 lakh rupees.
Now, there are two classifications to retail investor. One is the retail individual investor who is applying for the first time to the company. His maximum limit is that he can not apply for more than 2 lakh rupees shares. Okay. And there can be even, retail individual shareholder. That means he's already a shareholder of the company, and he can also bid for for an IPO or an FPO, but his limit is also 2 lakh rupees. So retail investor can be already an existing shareholder of the company, or it can be a prospective investor who wants to apply for an FPO or an IPO. Okay. Then we come to anchor investor. Okay, read this.
Anchor investor, a qualified institutional buyer who makes an application for a value of at least 10 crore rupees in a public issue through the book building process.
So, there are large investors who apply for at least more than 10 crores. Okay, they are known to the company. They are qualified institutional buyers who can make an application for at least 10 crore rupees in a public issue. So they are called anchor investors. Okay, so they are generally the first one to be allotted shares before the issue opens. Okay. Okay. Or immediately at the time when the issue opens. Okay, read further.
Anchor investors, also referred to as cornerstone investors in some global markets, are institutional investors who allotted shares a day before the IPO opens.
Okay, so that means they are allotted.
Big names in the
yeah. Carry on.
Yes. Big names in the anchor book instills confidence in the retail investors. Retail investors tend to take cues from the anchor book.
Okay, now that because the anchor investors are very large investors, okay, and they are offered the shares just before the IPO opens, okay. Their minimum application has to be 10 crores or more, and they help. I mean the retail investors, because they understand that these investors, when they put money and they are allotted shares before the IPO opens, so this gives the confidence to the retail investors. Okay, okay, so this we have done, qualified institutional buyers. So I'm just moving further. Okay, IPO lead managers.
IPO lead managers. A lead manager or merchant banker is a SEBI registered financial institutions. They play the most critical role in the IPO process. The book running lead manager works closely with the company from day one until the IPO shares get listed at the stock exchanges. IPO lead managers are also known as book running lead manager or BRLM.
Now, the merchant bankers who are appointed by the issue company, they are registered with the SEBI. So, any of the company who's coming with an IPO or an FPO, they have to, look for those lead managers which are registered with the SEBI and appoint them as their managers. Okay, so they play a very important role in the IPO process. They help the company to, see that all the formalities, all the legal, things are met by the company, so that there is no hassle and the SEBI, a smooth flow of the IPO or an FPO. Okay.
IPO lead managers are SEBI registered independent financial institutions appointed by the companies who help them with raising funds through IPO and getting listed at stock exchanges.
So their process is basically to help the companies to, get the IPO raised and get the shares listed on the stock exchange. Okay. Okay. Shivani, are you there?
So I'm there, but I can't see the next. Oh, okay, sorry.
Okay.
I think I read it, sir.
No, no, this is a new one.
No?
Yeah.
Alright, sir. Lead manager manages the IPO process end to end. Some of their responsibilities include initiating the IPO processing, creating DRHP and RHP, getting offer documents approved from SEBI and exchanges, and helping the company shares to get listed in the stock exchanges. The IPO lead managers are also known as book running lead manager or BRLM.
Now, the lead managers manages the IPO process end to end. So they provide end to end services. And what are their responsibilities? Initiating the IPO processing, creating a draft red herring prospectus, which is called DRHP, or a red herring prospectus. So, first a company has to make a draft prospectus and file with the SEBI, and then get it, red herring prospectus. That means when the SEBI gives a nod, then it may be called RHP at that stage. Getting the offer documents approved from the SEBI and exchanges. Now they have to get, both formalities of the SEBI as well as the Bombay Stock Exchange and National Stock Exchange, documents. They have to get them approved from them and get them listed on the shares of a stock exchange. Okay. So some of the, private merchant bankers, can you read them?
Yes, sir. Private sector merchant bankers. Yes Bank Limited, ICCI Securities Limited, Kotak Mahindra Capital Company Limited, Axis Bank Limited, Tata Capital Markets Limited, Reliance Security Limited, Bajaj Capital
So
Limited.
these are all the, private sector merchant bankers in India. Okay, then even ICICI the last, and then on the right hand side, just read. They are the merchant bankers who are the foreign merchant bankers. Yeah. Are you getting this?
Merchant bankers
Yeah, yeah.
are also called book running lead managers or BRLMs in case of public issues that are book built.
So there are some.
Examples:
Yeah, yeah.
FedEx Securities Limited, Goldman Sachs India Securities Private Limited, DSP Merrill Lynch Limited, Equities India Private Limited, Morgan Stanley India Company Private Limited, Citigroup Global Markets India Private Limited, Barclays Securities India Private Limited, Barclays Bank PLC, Deutsche Bank.
Okay, so these are the foreign merchant bankers. who companies can engage any of them or Indian merchant bankers. Okay, so foreign players in merchant banking. Okay, then the red herring prospectus. Okay,
Red herring prospectus. A red herring is a preliminary prospectus filed by a company with the SEBI, usually in connection with the company's initial public offering (IPO). A red herring prospectus contains most of the information pertaining to the company's operations and prospects, but does not include key details of the security issue, such as its price and the number of shares offered.
so basically, it is giving all the details, but the price is still, the price band is given sometimes, but not, I mean, all of the other informations are given, and the price will be determined through the book building process. Okay, so promoters, I'm just leaving, I will cover later. Green shoe option will be covering later. Price issue, so which anything, retail, it was, retail individual investors, we have already done. Net worth, we have covered. Preferential issue, self-certified syndicate bankers members we have covered. Okay, so this is all about this thing. So we just move back from our slide which we started with. Okay, so this was the slide which we were at the air. So we then move on to the definitions. So there is some at the bottom there is some link. Okay, so we will just go to this link. um, so we'll go to the link. So this is National Stock Exchange site where where the details are given. So I just opened the wrong link. So I will open this one. We'll come to that later. Second link. So so these are this site tells you about various kinds of IPOs. Okay, fine. So the current past issues. Okay. So for example, these are the current IPOs which are there. So we can just we can go into past issues. Okay. So it will tell you whatever issues which are there. Okay, which are in the last 1 year or last few months, the issues which have been opened. So let's go to one of the issue which I'll come back to this link again. Okay. So so Zomato came up with a issue in 2021. Okay, so I'm just going to take you through one of the issue. Can you read this, Shubhangani, which is written here?
Yes, sir. Zomato IPO is a book build issue of rupees 9,375 crores. The issue is a combination of fresh issue of rupees 9,000 crores and offer for sale of rupees 375 crores.
Hold on,
Zomato IPO.
hold on. So this was an issue which was through a book building process, which means this is an alternate method of raising money because the company was not meeting the financial criteria. So they wanted to issue shares worth 9,375 crores. The issue is a combination of fresh issue, which is 9,000 crores, and offer for sale of 375 crores. So that means 9,000 was the money which will be received directly by the company. Okay, and 375 crores will go to the shareholder who is offloading his share. That means one of the promoter is offloading his shares either fully or partially. So that offer for sale was for 375 and the fresh issue was 9,000. Now read further.
Zomato IPO bidding started from July 14, 2021 and ended on July 16, 2021. The allotment of Zomato IPO was finalized on Thursday, July 22, 2021. The shares got listed on BSE NSE on July 23, 2021.
Hold on. Now Zomato IPO bidding started on 14th of July. and ended on 16th of July. So on the third day, this offer was open for 3 days, and the company got all of its money in 3 days. So it was closed. The allotment for IPO was finalized on 22nd of July. So on 22nd, they finalized their offer, and the shares got listed on 23rd of July, on Bombay Stock Exchange as well as National Stock Exchange. Further, read further.
Zomato IPO price band is set at rupees 72 to rupees 76 per share. The minimum lot size for an application is 195 shares. The minimum amount of investment required by retail investors is rupees 14,820.
Okay, now just hold on. So, which means company has given a price band of between 72 to 76, and there was a lot size. Each shareholder, retail investors, when they apply, they have to their lot size is given to them. They can't apply for just one share or 10 shares. So, minimum lot size, which was mentioned in the prospectus, was 195 shares. Which means if we multiply 195 with 76, if suppose the highest price goes for the issue price, then the minimum amount for investment required for retail investors would be 14,820. If suppose the price is fixed at say 75, so they'll get 1 rupee, that means 195 rupees as a refund, or through UPI payment, or ASBA, which we talked about. So the process of raising money through the two mechanism, one is called the UPI. Now the UPI is being used for the retail shareholders. So they give a mandate to the bank to the extent of 14,820 to be taken out from their bank. Okay, and depending on at what price the share is finalized, then the bank will only deduct that amount, and rest will be given back. So that block will be removed for the rest of the amount. Okay, read further.
For Securities India Limited, Citigroup Global Markets India Private Limited, Credit Suisse Securities India Private Limited, Kotak Mahindra Capital Company Limited, and Morgan Stanley India Company Private Limited are the book running lead managers of the Zomato IPO, while the Link in Time India Private Limited is the registrar for the issue.
So these are all the merchant bankers who were involved in raising money for the company. So they were appointed as book running and lead managers, and the company has to choose also a registrar for the issue. Okay, so we'll talk about that. So the Link in Time India Private Limited, which earlier we used to have Carvey, and all those companies have closed now. So this was the Link in Time India Private was called the registrar of the issue. So fine. So this is the current situation. This is the price of Zomato today. Okay. So if you look at Zomato was issued between 72 to 76. Okay, but now it is trading at 121. So that means people who invested the money, so they are making a good profit. So this is over the last couple of months, the share prices have started going up. Before that, it was below the issue price. For quite a long time, the company was trading. Like 52 weeks low was 44 rupees. So it has fallen below the issue price when it was came into. It happened even in 2023 when the low price was 44. Okay. So now IPO details. Okay. IPO date given, listing date is given, face value of the share was 1 rupee, price band was, and lot size was 195, total issue size, total issue size was aggregating to 9,000, so company wanted 9,375 crores. The number of shares and the price was not mentioned, it was depending upon, at what the share price, at what price the bid will be closed, okay. So offer for sale, so this is the timeline. Okay, basis of allotment, then refund. IPO open date was this thing. IPO close date is given, and basis of allotment, which happened on the 22nd of July. Initiation of refunds happened on 23rd. Credit of shares to the demat account was done on 23rd. Listing date was 23rd July. Cutoff time for UPI mandate confirmation was 5 p.m. Okay, so this is some of the information which is given. So offer for sale was 375 crores and fresh issue was 900,000 crores, and it was called a book built issue, and listing was done on the two stock exchanges. Okay, so retail minimum 1 share and maximum 13 shares. Okay, so this was the lot size, which they could go up to only up to 2 lakhs, So maximum they can apply for 13 lots, which will be 2,535 shares, which will amount to 1,92,000. So what is the limit of for the retail investors, Shubhangni? How much a shareholder can apply, a retail investor? Up to what amount? Anyone? So retail investors can apply for only 2 lakh rupees. Okay, so that's why the amount is 1,90,000. So this is the maximum which a shareholder could apply. Okay. Okay. Now read this, Shubhangni. Zomato IPO reservation.
Zomato IPO reservation. Zomato IPO offers. uh, just a second.
Okay, so this is okay. This is whatever this 71 crores.
71 crores
Okay, so anyway, so what
shares.
will be the amount? So okay, so 54% of the shares were given to QIB. Okay, fine, and 27% to NII. And RRI, which is the institutional retail investors, were given so much of shares. Employees were given some shares. So I didn't talk about QIB. We talked about, and then we talked about the retail investors. Then NII is the non-institutional investors. So which is basically big investors, which includes the anchor investor also, and big investors who have a good net worth, so they can also make an application. So we'll talk about those NIs also. Okay, so this is basically HNI investors. Okay, so the QIB shares were 54%. Okay, fine, and now in process we learned that the minimum 75% should be offered to the QIB. So it is coming less. So we'll discuss that later. Okay, then NIs were given 27%. Okay, which is the this thing. So maybe that NI put QIB is coming down to more than 70%. Then retail investors are offered 18%. Employees were offered around 0.9%. Okay. Okay. So what is about Zomato? Just read this.
About Zomato Limited. Incorporated in 2010, Zomato Limited is one of the leading online food service platforms in terms of the value of food sold as of December 31, 2020. Its B2C offerings include food delivery and dining out services where customers can search and discover restaurants, order food delivery, book a table, and make payments for dining out at restaurants while under the B2B segment. It generates revenue from Hyperpure, supply of high-quality ingredients and kitchen products to restaurants, and Zomato Pro, customer loyalty program. As of December 31, 2020, Zomato has established a strong footprint across 23 countries with 1,031
1,31,233.
1,31,233 active food delivery restaurants, 1,61,637 active delivery partners, and an average monthly food order of 10.7 million customers.
Okay. Now, it has certain, comparative stance and everything. So, company has to give all before the shareholders. Now, this, was an item which appeared just before, the IPO. So that's why it's talking about. So then, some kind of, objects of the issue. Okay. So where they're going to put the money, the net proceeds on IPO will be utilized towards the following objective: funding organic and inorganic growth initiatives, meet general corporate purposes. So they're going to, start new a thing, as well as they're going to make some kind of an acquisitions, which is the inorganic growth, merger on acquisitions, or through organic growth. That means they're going to start their new ventures or new investments. Okay. Okay, let's say. So then it is given how many times it was subscribed. So the issue was 38 times oversubscribed. QIB portion was oversubscribed by 51 times. Non-institutional investors were about 32 times, and retail investors about 700 times, and employees was about 1 to 6 times. Okay, so then let's see. Okay, so it is all other information is given. So this will all help you basically. And then there is always a recommendation. How many people were recommending. So they were, the brokers who were recommending, 5 were saying go ahead, 5 were neutral, 1 was saying to avoid this. Okay. So these were the lead managers. Okay. Fine. So, okay. So some questions. Okay. So I'm coming back to this. So Zomato. Okay. Do you order from Zomato, Shivangani?
Yes, sir.
Okay, okay, fine. So, we were talking about, this was, this IPO was opened in which month? July. Let me see. Zomato was there on July 14, 2021. Okay, suppose we want to just see on a site. Okay, so it was 2020. So we will go for say 2021 and see whether what is there in the National Stock Exchange regarding Zomato. So we can just trace that. So it was July, so that means July, and then ending date was, so this was, so I have to change that date. It was not 1st July end date. So 1st July was this, okay, and end date would be maybe 31st of July. Then I'll go for it. So are you getting Zomato somewhere? This one. Okay. So this is the, this is the National Stock Exchange portal which keeps the account of every shares. Okay. Zomato. This was equity. Okay. Now it can be even a small and medium enterprise, or it can be even debt issue. Okay. So Zomato came up with, and what is the issue price? What are the issue band there between 72 to 76? So what was the price finalized through the book building process? 76. Okay, so that means they got a very good response, and it was at the upper end of the band. The share price was issued. Okay, fine, and date of listing was this. So we can just further drill down and see some information which will help you when you do your project. Okay, so this will give you a complete story about how many people applied and other things. Okay, so we will go through this, and maybe in the next next time when we meet. So. So Shubhagini, I just sent an announcement regarding the group project. Have you got it?
Yes, sir. Yes, sir. Yes, sir.
Okay, so in this, just to give an idea, under this group project, you can choose any IPO and discuss about that in your presentation as a group, and then we'll talk about how they fix the price and what should be the right price. So we're going to discuss that by coming in the next Saturday when we meet again. So we are going to discuss that. Okay, fine. So that is there. So it can, even when IPO or a mutual fund or a forex management by any Indian companies, how they manage the hedge their currency risk. So you can cover any point you want. Okay. Okay. So what's the time now? It's
So
still,
it's 1,
it is
1 p.m.
1:03. So we will just carry on for another 15 minutes, and then we will close the day for the day after taking the attendance. Okay. So just read them. Just maybe another 10 slides we'll cover maximum. Okay. Can you read?
Yes, sir. Additional conditions for an offer for sale. Shares must be fully paid up, shall be held by the sellers for a period of at least 1 year prior to the filing of the draft offer document.
So, when there is a, there are some additional conditions when there is a share for an offer for sale. Now, if an existing shareholder who happens to be a promoter or a big shareholder and he wants to offload his shares, in that case, there are some additional conditions. Share must be fully paid up. That's the first one. He must have paid all the amount due on the shares, and he should hold the shares for at least 1 year prior to the filing of the document. Okay, he can't just have the shares a month back and then he's offering for sale. He should hold the shares for at least a period of 1 year prior to filing the offer document. The moment you file a document, before that, 1 year should have passed. If it is loaded, offloaded, the shares are being sold by an existing a big shareholder of the company. Read further.
The holding period of such convertible securities, including depository receipts as well as that of resultant equity shares together, shall be considered for the purpose of calculation of 1 year period.
Now, suppose in case, if you are holding a convertible security, he was holding a convertible bond, which was, to be converted into share later, then the holding period of the convertible security shall also be considered for calculating the 1 year. Okay. So either he is holding a convertible security or a depository receipt, which can be, we'll talk about what are depository receipt later. So if he is holding a convertible share, which is getting converted, into share later on, so the period of 1 year will be considered for that also. Okay.
In case the equity shares received on conversion or exchange of fully paid up compulsorily convertible securities, including depository receipts, are being offered for sale.
So that means, the period of the time of, when he holds the convertible shares will be counted for the purpose of offer for sale. Okay.
Further, such holding period of 1 year shall be required to be complied with at the time of filing of the draft offer document.
So, that such period of holding shall be required to be complied with at the time of filing the offer document. So, he has to comply with this 1 year period at the time of filing the draft of offer document with SEBI.
If the equity shares arising out of the conversation or out of the conversion or exchange of the fully paid up compulsory convertible securities are being offered for sale, the conversion or exchange should be completed prior to filing of the offer document. That is, red herring prospectus in the case of a book build issue and prospectus in the case of a fixed price issue, provided full disclosures of the terms of conversion or exchange are made in the draft offer document.
So that means, there's some further time given to the big shareholder. So either he has to do it, at the time when the offer, issue, when the issue opens, he has to do it just before that. Okay. So if the equity share arising out of the conversion or exchange of the fully paid up compulsory convertible securities are being offered for sale, the conversion or exchange should be completed prior to filing of the offer document. So suppose there are convertible shares, they were, at the moment they are bonds, but they are converted into shares at a later date. So that conversion process should have happened before they are offered for sale. It's not like, you can offer a convertible debentures to the shareholders. It has to be in form of shares. So that means the conversion should have taken place at the time of filing the offer document, which can be a red herring prospectus in case of book built issue or a prospectus in case of a fixed issue. When, companies, there are two ways through which a company can issue shares. One is, through a book building process by issuing a red herring prospectus without announcing the price, only announcing the price band, or they can even, issue the shares by fixing a share price. Suppose the company is meeting all the financial criteria which we discussed in the early morning. So if they are meeting all the regulations, they can instead of announcing a price band, they can fix a price, and at that time they can mention that fixed price in the prospectus. So then they need not issue a red herring prospectus. Then it is not called red herring prospectus because it is containing the price of the share. So it is called prospectus. Okay, provided full disclosures of the terms of the conversion or exchange are made in the offer document. So if they have been recently converted into shares, so all the details should be mentioned in the offer document. Okay, non-applicability. So we'll just do two more slides. Yeah. So एक second, just hold on.
Unapplicability.
एक second, I'm just skipping
Yes,
this.
sir.
Okay, I'm just skipping this because these are, you can just read them.
Yes,
So
sir.
I won't be covering them into this thing. Okay, last one, issue of warrants. Here, we just read.
Issue of warrants, Regulation 13. An issuer shall be eligible to issue warrants in an initial public offer subject to the following. The tenure of such warrants shall not exceed 18 months from the date of their allotment in the initial public offer. B. A specified security may have one or more warrants attached to it.
So an issuer shall be, now we are talking about the regulation number 31, issue of warrants. Now company can issue warrants, okay, which means that these are financial instruments which are later on converted into, most likely into shares. So issuer shall be eligible to issue warrants in an initial public offer subject to following. So an issuer can also issue warrants along with, the public issue which he's making. So he can attach some warrants. Anybody who applies for shares, he will get warrants also, which will entitle him to get shares against those warrants at a later period. The tenure of such warrants shall not exceed 18 months from the date of their allotment in the initial public offer. So if a company has, are issuing warrants along with an IPO, they are allowed to do it, but the tenure of such warrant, that means the shares, these warrants should become shares within 18 months. So it can't be more than 18 months. Specified security may have one or more warrants. So that means you can even attach either one warrant or two warrant or three warrant. I mean, the companies are at liberty to issue as many warrants they want along with the IPO application. Okay.
What are stock warrants? A warrant is the right to buy a specific number of shares from a company at a certain price in future.
So that means when the company is issuing stock warrants, so they are giving a right to the holder of the warrant that he can convert these into shares at a certain price in future. So the price will be fixed at the time of issuing the warrant, but he has to make the payment at a later date. Okay.
Issue of warrants. The price or formula for determination or exercise price of the warrants shall be determined upfront and disclosed in the offer document, and at least 25% of the consideration amount based on the exercise price shall also be received upfront.
Now the company has to give the price formula, and that should be determined. Okay, at what price this warrants will be converted into shares. So that should be determined upfront and disclosed in the offer document. So how the price has been fixed, like suppose for example Reliance come with an IPO for example, and their share price is today at say 2300. So they attach a warrant along with an FPO document. So they say that the shares will be issued against these warrant at say 1500 rupees, okay, which is much less than the current price. So they can always give that a warrant which can be attached with the issue document, okay, and the price should be given in the offer document along with how it has been worked out, and at least 25% of the consideration amount based on the exercise price shall be received upfront. So they should immediately demand 25%. If a company says that they are going to issue shares at 1500, so 25%, so that means around 400 rupees or thereabout, they are going to collect immediately along with the application. The rest of the money can be collected later. Okay.
In case the warrant holder does not exercise the option to take equity shares against any of the warrants held by the warrant holder within 3 months from the date of payment of consideration, such consideration made in respect of such warrants shall be forfeited by the issuer.
Now, suppose somebody has applied for that warrant and he has paid 25% upfront, but if he fails to pay the balance on the date when he is supposed to make the final payment, and I mean, suppose the 3 months, any of the warrants held by the warrant holder within 3 months, so he has to make the payment within 3 months, okay? And if he doesn't pay, then his warrants will be forfeited. That means all the money which have been collected by the company that will be forfeited by the company, and don't have to give any refund to the warrant holder. So I just read it again. In case the warrant holder does not exercise the option to take the equity shares against any one of the warrants held by the warrant holder within 3 months from the date of payment of the consideration, such consideration made in respect of such warrant shall be forfeited by the issuer. So he doesn't make the payment within 3 months from the last date of making that payment. So then in that case, whatever he has paid upfront will has to be forfeited. Okay. Now this is the last slide we have covered. So if you go through these regulations, so the regulation number 4 to 55 are for an IPO, and for an FPO the regulations constitute from 101 to 131. I've already shared the IPO regulations, so you can just go through them, but they are more or less identical. I mean, of course, IPO may have little more regulations than what the FPO has. Okay, so a company can either go for an IPO or an FPO. So a company goes for an IPO when it's the first time it's raising money and getting listed on the stock exchange, and the FPO is further public offer. That means company needs money subsequently after it has already gone through an IPO. So I mean, there are regulations for each kind of a public issue which are mentioned under these regulation numbers in the offer in the ICR document. Okay, so okay, so this we will be doing next time. So I'll be just closing for today's this thing. So I'll just stop.